So in today's video, I'm going to go into detail on how I worked with a new loan officer, less than a year in the business, to help him get this condominium loan closed. And it's a situation where there was litigation. A lot of condominiums have litigation. There are a lot of other issues with condominium loans. They tend to run into difficulty right before the closing because the condo questionnaire often comes in later in the process. And so unfortunately, we do see these problems cropping up at a difficult time when the loan is ready to close. Now, some of these issues cannot be fixed. Fortunately, this one was able to be fixed, and I'm going to go into great detail with you on how we were able to get that done. I hope that you will, if you run into a similar situation, remember this guidance, and it will allow you to get your loan closed, allow you to earn your commission, allow you to add another satisfied borrower who you can count on for repeat and referral business, and also allow you to maintain or increase the original referral that might have come to you from a realtor. However, all those factors together are only the third most important thing that I hope you gain from this discussion. The second most important thing that I hope you'll learn is to see the thought process, to see the questioning process that I went through with the new loan officer so we could work together to get the loan closed. As I tell all my students, the origination and underwriting process, there are three steps. Step one is to gather all the data. Step two is we need to verify the data. And step three is we need to compare the data against the rule set, against the underwriting guidelines. And so often I see the problem arises with new loan officers. They don't gather all the necessary data up front. And of course, if they don't gather all the data, well, then they don't know which data they have to verify or what document they need to obtain to verify it. And of course, they can't compare data against the rule set if they haven't captured that application data up front. And then when it gets into underwriting, the underwriter doesn't have the data. So especially today where there are so many newer underwriters, companies are looking to bring in less costly underwriters. There are still some very highly skilled ones in the business. There are still some. I do hear occasionally a story about an underwriter that tries to help a loan officer close deals, and I'm sure that they're out there, but there's a very large percentage of them. They're going to only be able to react to what's given to them. They're not going to work with you to help flesh out all the facts, which then would allow you to make a stronger argument as to why your loan should be approved. Now, this particular situation came up in an online discussion group, and I am going to read some of my notes from that discussion group, first to frame the problem as it was originally posed by the loan officer, next to give some of the other responses that other mortgage professionals gave. And that leads me to the most important point that I want to make in this video, especially if you're newer. So you're in the process of taking the test, you've taken the test, you're searching for a company. And that is, you need someone who is going to go through this process with you on every one of your loans. So I don't care if you work for a broker, for an independent mortgage banker, for a credit union, for a depository bank, if you work in a call center, You're not going to learn the business until you learn to think in the manner that I was able to go over this situation with this particular loan officer. And too often, I see people that are promised support. So if you go into one of these online groups and you say, "Hi, look, I just passed the test. I know I can bring in some business. I'm not sure where should I work. I know I need some support." I mean, you'll see people falling all over each other to promise you support. But then we see just as many posts of people that have now put their license with someone and they're not getting the support that they were promised. So the most important factor for your success as a new loan officer is someone who, ideally in person, it can be done over Zoom. It's ideal in person because there are going to be some situations like complicated tax returns. They're going to be difficult to dissect over a Zoom, but you do need to carefully interview the company you're looking to get hired with. If you're already stuck in a bad situation, hopefully you'll know enough now to more carefully interview your next company. But that is the most crucial factor to your success until you learn to be able to go through this thought process on your own. So I'm now going to read here the original problem that was posed by the loan officer. Of course, I'm not going to mention the individual's name. I'm not going to mention the names of any of the other folks who chimed in, most of the time, unfortunately, with not great advice. But I am going to be reading for the notes so that I can give you the full discourse that took place. So here it came in. He stumped on this one. He's got an 80 LTV condo, 780 score, and the only remaining condition is HOA in litigation for $150,000 lawsuit. Must provide proof from insurance company will pay claim if found liable, or provide HOA balance sheet to reflect 10 times the amount of litigation, $1.5 million. Now, he goes on to say, obviously, insurance will never guarantee a claim to make payment while still in litigation, and the insurance company indeed confirmed this. So he must have had some contact with someone at the insurance company. He says the HOA does not have $1.5 million on the balance sheet. Is this going to be an issue with all conventional lenders or just this particular one? I'm having a hard time believing that all condo sales transactions under this HOA is being held up in mortgage land. So he's got a good thought. This is not an overlay. This situation is going to be for any lender doing these Fannie Mae condo loans. But he also has a good thought in that, and as we'll see later, there have been loans closed. And so he's having a hard time thinking that they're all cash sales or they're all non-QM. So I'm going to come in here first. I'm going to go through some of what I consider to be the bad answers. Then I'm going to go through some advice that I think is pretty good, even though it's partial. And then I'm going to go through the whole dialogue that I had with this new loan officer to help them get to the point where they were able to work with the underwriter and get the loan cleared to close and close. So here's the first comment. Litigation is always a problem and in the best interest of your borrowers to get resolved before they purchase the unit. Well, I guess that's not the worst advice, but the closing in this situation was due to be held in about 2 days. So this was litigation against the HOA. It's good that the borrower was aware of the litigation because they're going to be now in an HOA where dues are going to be based on all the expenses, including any that are due from litigation. But that's not really helping the situation. Let me go on here and get some other comments that I don't think that were helpful. Litigation is a problem. 150,000 even with no subrogation waiver, no one's going to want to touch it. Always important to get your condo questionnaire as fast as possible. That's true on getting the condo questionnaire as fast as possible. Now, here's another one. Need a private investor that doesn't require condo review. I had to find one myself for Florida condos with similar issues. So this one particularly gets my goat. This is not someone who's an account executive for non-QM, but I do notice when people are asking for help so often, immediately here come the non-QM account executives. And I understand they need to make a living, but it's not really helpful until all the conforming possible solutions have been handled. If you're a new loan officer and you hear litigation and you get a pre-approval through a non-QM lender, and then at any point during the process, that borrower goes to somebody else who knows what they're doing and realizes that the loan could be closed on a Fannie Mae basis, you're going to look horrible to the borrower. You're going to lose the borrower. You're going to look horrible to your referral source, realtor or otherwise. And so before you have a knee-jerk reaction and go right into non-QM, try to think it all the way through to see if there's a way to close the loan. Now, here's another one. I had the same situation about a year ago, and the deal did not go through underwriting, would not clear to close a transaction. The comments given by the group here was the same that happened on my deal. Not great. Another one. Lots of issues with condos these days. Litigation has always been a sticking point. It's a solid no if it's a health safety item. You will probably need to use a program that allows for non-warrantable condos, not Fannie Freddie. A few more. I want to give you the full idea because you may get promised support, but you want to make sure that you get support from somebody that's going to dig in further. Not that you're going to call a help desk or a scenario desk where hopefully they know what they're doing, or you're going to get assigned to another loan officer or a manager that's really busy and is going to give you a quick brush off answer. That's not what you want. Now, here's one that's straight from the guidelines. Yeah, somewhat straight from the guidelines. We'll get back to that in a minute. Another one, find someone who does non-warrantable condos, but LTV might need to be lower and cash reserves are king. And one last unhelpful comment. No lender nor investor wants a condo with any hint of an issue, legally or structurally. Since the collapse of the building in Florida, they are black sheep, and the guidelines make them that way. Well, yes, the guidelines have gotten a lot tougher. But they can be closed. Now, I'm going to come back here, and there are a few comments that were somewhat helpful. And I'm going to go over those with you to show that there were people trying to head in the right direction with the situation. Here's one. Pull title on closed sales to see who is lending. They cannot ignore litigation, so they may have paid cash or went to a lender that lends in a non-warrantable project. Well, the idea of looking to see who else is lending is a good thought. Here's someone, it's interesting that there have been recent sales closings. Is there an agent who works a good amount on that property that you can reach out to, or can you check property records and see what mortgage companies have lent there recently? Again, that's a pretty good idea. If you're brokering or if you're a correspondent, you have the ability to go to different investors. But again, 2 days before the closing, going in now and starting to look and see who may be loaning, giving up on getting it through your existing situation, whether you're brokering or whether you've got an underwriter that's at your lender, giving up right away and starting to switch the file, not really knowing why the loan was turned down. I mean, having some idea, but not having dug through is not the best not the best situation. Here's another pretty good comment. The seller's agent should have caught that. Well, that's true. However, the loan officer should have also asked up front. You know that litigation can be a deal killer. So asking up front would at least show the realtor that you're thinking about the situation. What we could have had here, and I'm not saying absolutely this is what happened, but it's what it looks like. You got a realtor that does very little business. Maybe they're selling their cousin's condominium. They don't know to ask about litigation. You got a new loan officer who maybe hasn't dealt with a condo before. They're not aware that litigation could be an issue. And as we'll see, we got an underwriter who isn't being very helpful and certainly doesn't know enough about condos or isn't open to working with the loan officer enough to see how the situation could be turned around. So now let's get back to the discussion and we can learn how, through digging out more details, we were able to get the loan closed. So in the original comment, where he says the HOA does not have the $1.5 million on the balance sheet, it's not really on the balance sheet. It needs to be the damages and the legal expense need to be less than 10% of their funded reserves. So if the claim was for $150, and then if there were going to be legal fees, you would need 10 times that in their funded reserves, not so much on their balance sheet, which is a little bit of a not exactly detailed comment. So let me see where I got in here and started the conversation. So first I told the borrower, not the borrower, the loan officer, I said, here are the Fannie rules which generally confirm what the underwriter said, but see the point about the insurance company providing the defense and stating that the claim is covered by the policy. What is the nature of the lawsuit, I said. So the loan officer got back to me, and I've got these notes here. Thank you. I'm trying to find out the nature of the lawsuit. The condition does not elaborate. So either the loan officer didn't have access to the questionnaire, and or the underwriter wasn't particularly being helpful with the loan officer. So now we got some details from the loan officer. The lawsuit has been pending since 2020 on a building down the street from our subject property managed by this same HOA. A sublet tenant is suing the owner and the HOA for negligence due to mold causing health issues and contaminating personal property. Here's what I do not understand. There have been a ton of sales in this HOA since 2020, including 2 in the last 2 weeks and the 9 in the last 90 days. It also has 5 units in various buildings under contract. I find it hard to believe every one of these sales had to go non-conforming. So he's right. He's seeing that something is up here. Now, let me get back to some more of the details now. So now this is me back to the loan officer. Has the source of the problem been remediated? What specifically caused the problem? So I'm saying there could be an opportunistic tenant in a unit if there's some visible water damage and they sued. I'm suggesting getting the detailed facts and then making your argument if you can show the issue has been solved and the lawsuit is mainly or mostly frivolous. Now the loan officer comes back. These are 2-level townhome-like builds, zone classified as condos. The condo involved in the lawsuit was 3 buildings down the street and not attached to my borrower's property. The lawsuit condo was sold in 2018 and is now occupied by a new owner. So I can only assume the mold issue has been remediated. The person who was subletting from the previous owner, also named in the lawsuit, also moved out in 2018. So here's my more or less final advice to the loan officer. I think you have a strong argument, especially as the HOA is made up of separate townhome-like structures. It would still help you get more detail about the cause of the problem. Was there a storm that caused a small roof leak that the tenant made into a big deal? Some lawsuits can literally sit there for years, especially frivolous ones. Someone gives, I said, $1,000 to a lawyer, or maybe the lawyer does the filing for free, and they try for a quick settlement. Knowing the lawsuit is frivolous, the HOA refuses to settle. Now the plaintiff's lawyer wants more money to pursue the case and the tenant won't pay it, so it just sits there for years on end. The HOA has an attorney, and the HOA wants their owners to be able to sell the units. There's a good chance someone, the realtor, the HOA president, etc., can get the HOA attorney to write a letter which would give you more ammo. Now, going back into the Fannie Mae guidelines, and when you're discussing litigation, it says that the litigation is okay if one or more of the following scenarios is true. One is when they have 10 times the amount of the lawsuit and legal costs in terms of the funded reserves. Well, that is not the case here. The second one is if the insurance company is providing the defense and any damages are covered by the HOA policy. Now, that may or may not have been the case here, but we do remember that our loan officer contacted the insurance company in the beginning, and at least from that initial discussion, that wasn't the case. Although, again, who knows who he spoke to at the insurance company and whether they knew what was really going on. Now, there's another reason, another factor that can cause the litigation to be acceptable, and that's if the litigation concerns localized damage to a unit that does not impact the overall safety, structural soundness, habitability, or functional use of this project. Well, that one clearly meets the guideline. This was in one townhouse. They're all separate buildings. It has nothing to do with this particular owner's building. And so finally, the loan officer did get back and said, thank you so much for helping me. I had the HOA attorney write a letter. The underwriter accepted it, and now the loan is closing. Now, it was most likely around this factor here that it was on the separate unit, most likely that it's frivolous, right? A little roof leak, and there's some tenant that's since moved out that's put a lawsuit on years ago that's just sitting there. Can't absolutely tell you from a back and forth on a social media post exactly what happened. The way I could is if I had a private consultation with this loan officer. But I hope you saw the process that I went through to get out more of the facts, match the facts up with the guideline, suggest how the condition could be met, how we're going to verify what was happened, which was through a letter from the HOA attorney. So if you would like to have me train you personally, I can only be online and help out so much because I am busy with my private students. If you would like to get in touch with me, it's Alan, ALAN, at the complete 1003.com, Alan at the complete1003.com. You can also go to the website, thecomplete1003.com, thecomplete1003.com. You can learn a little bit more about the program. If you want, you can fill out a form there. You can get right to my calendar. You fill out the form, you get to my calendar. I'll help you as much as I can, whether you decide to become a student or not. If you have somebody who is really helping you in a detailed manner on every single loan, the benefit to working with me would be you'd become independent faster. You're not needing to have this person available every step of the way. If you are a manager, a company owner, you're in the executive ranks at a larger firm, the benefit is that you'll feel comfortable turning this person loose sooner. You won't have to have them taking up the time of one of your other, possibly one of your producers. And even if you have a non-producing branch manager, once you have this person ramped up and closing loans and not needing as much help, that manager can go on and can continue to hire and train others. The program, it has 2 versions of software. One version has all the questions that an underwriter is going to look at, and then it discusses guidelines, especially around ways you could save deals like this, or ways that a loan officer could send files into underwriting, and I call those deal killers. It's deal savers, deal killers. A lot of the prior videos were on deal killers. Today was a deal saver. There's a second iteration or a second version of the software. It just has the questions. So you can fill out a supplemental mortgage application. Very few questions in common with the 1003. This discussion today will not come up anywhere on the 1003. Is there litigation against the condo? What's the nature of litigation? None of that's going to come up on the 1003. So by filling out a supplemental 1003, now you can have all the data. You can have both versions of the software open at the same time. So if you come to a question and you're not sure why you're being asked that question or why you need to ask that question, you can then have the educational version of the software open where all the guidance will be under the question. Now, this can also help you out with the sales part of the business. You need to sell, you need to market, and you need to know how to underwrite and structure your loans. If you're asking these kind of questions of a real estate agent up front, you're showing that you're on the ball. And if the realtor's on the ball, they're going to be real nervous if you don't ask them these questions. And same with the borrower. If you ask and they don't know, and then they maybe check with the realtor and the realtor doesn't know and the realtor finds out, then you can deal with this issue up front. You can try to flesh out the details. And then when you find out, you can go in with more confidence that when the litigation comes back on the questionnaire, that you've already got a solution for it, because all of this process could have been handled right at the beginning when the loan was going into contract. Now, this loan officer was headed in the right direction. He could see other units were being closed, but he wasn't ready to deal with it until basically a condition came back from underwriting that he couldn't meet, and nobody could meet it. They didn't have 10 times the amount of the lawsuit in funded reserves. So that wasn't a way that it could be met, but there was a way to meet it. I think that's going to do it for today. Alan at thecomplete1003.com or thecomplete1003.com. And anyone that gets on my calendar, it's going to be a low-key discussion. Low-key, except you see I'm fired up. I like people to do a good job. I like customers to be handled properly. I like all the loans to close in 1 or 2 touches. So it's not low-key in that sense, but it's low-key in that if after we talk, you want me to help you more privately, it's fine. And if you don't, I'm not going to press you into it. So I wish you the best of luck out there, everybody. I know it's a tough market, and I look forward to meeting with you if you'd like to chat with me.